Today is going to start you on a little journey from the beginning right through what it looks like to taking back control of your money and giving you actionable steps every part along the way that we go today of things you can start doing right now to start taking back control of your money, solving your money problem, and setting yourself up for the future. So I'm super excited for today. I've been doing this now for 14, almost 15 years. And what I mean by this is I mean the alternative investing universe, entrepreneurship, business ownership, investing through private businesses, real estate investing. So out of college, I was a personal financial advisor, had all my stockbroker's licenses, Series 7, Series 66. I was on that side of the fence with Ameriprise Financial for about 2 years. I had an introduction to real estate investing by attending a seminar. One of my cousin actually invited me to a 90-minute free sales seminar. Actually, Chris has a pretty similar story on how he kind of learned about real estate investing as well. And it's amazing how that stuff works. So I attended that. It all made a lot of sense to me. My cousin and I started doing some deals. I started learning more and more about the business. I had an opportunity to go out there and start teaching it and educating it. And when I was in my early 20s, when you say, hey, we're going to pay you 6 figures a year to fly all around the country and teach people how they can change their lives, I jumped on it. So I gave up all my hard work that I did to become a financial advisor. And I decided I'm never going to look back and go back to the corporate world. And no matter what I do in life, I'm going to work for myself. I'm going to control my own future. And 14 years later, I've been doing it one way or another ever since. So over that time, I've had a lot of experience. I've met a lot of really cool people. One thing you're going to hear a lot from us is your network equals your net worth. And I can't tell you how many times in life that's come around. Like when I start to run into challenges, somebody from my network will pop up or I'll reach out to them and they're right there to help me get over that road bump, get over that roadblock that's stopping me from what I thought was achieving success. And all it was one little thing, and them helping me out, got over it, and it allowed me to do what I wanted to do. So that's where Chris is right now. He's at a mastermind. He's out networking, building relationships. And as those of you that have followed us in the past, we bring all of these relationships to you. So if you're in Money School TV, MSTV, we do our coaching every month where we bring in our mentors, experts, people from our network, and you have full access to them every single month. We bring them in the Private Money Club. We bring them on our 3-day trainings. And then we also find opportunities ourselves and we give you guys access to those opportunities. So things like the Intellivision. I mean, how many of you learned about the Intellivision private investment on the 3-day training and you're in talks or taking action on that right now? Just write Intellivision, or Amico is the name of the system. Amico over in the chat box if you are. I'm just curious. I was talking to somebody on the phone yesterday that live out in Orange County, and 2 of them are actually going out to tour the facility and the corporate offices and stuff. So it's really cool to see that. So yeah, we got some people chatting in. And just a little side note on the chat box, there's a blue box on there. If you click everyone can see your comments. If it says host and panelists, then only myself and Shauna can see your comments. So if you want to do something private, do host and panelists. If you want everybody to see it, do everyone so everyone can see that. So we have a lot of Intellivision comments coming in now. So things like that, things like the Safari Fund, which I'll talk about a little bit later. Things like these different private flips that you can get involved with. So these are all opportunities that we went out, we found, we're investing in, and we bring them to you as well. So back to the beginning, okay? So this is all about taking back control of your money and solving your money problem. So the first thing that I want to start with is, do you have a money problem? Okay. So according to the Social Security Administration, 95% of Americans have a money problem. And what I mean by that is the Social Security Administration tells us that 5 out of 100 people are going to be able to retire in a lifestyle and at an age that they plan to do so at. Meaning 95% of people in the United States right now are either having to push back retirement or drastically alter the retirement that they're living because they don't have enough money to make it last for the rest of their lives. Okay. So that's the first question is, do you have a money problem? And even if you're on track, even if you feel like you're doing well, let's say you have $3 million right now in a 401k. And you're like, all right, my financial advisor has a plan for me. When I retire in 3 years, I'm going to use that $3 million. We have a plan set up that's going to pay me a certain amount of monthly income each month. And I'm not going to have to worry about it. I'm going to be able to live my dream. But what happens if you have $3 million and all of a sudden the stock market crashes next year or in 2 years or later this year? Or sometime before that 3 years is up. Even if you're in very conservative investments, you're still going to lose a significant amount of money. Did anybody go through that in 08? Did anybody go through that in the 2000.com class? Does anybody know somebody that went through that before, right? It happens every single day. So there's a lot of things that are out of our control. We can't control if the stock market crashes. We can't control if a company like Enron is frauding its investors and goes completely out of business. We can't control if all these tax laws change and all of a sudden we're paying so much money in taxes that we have no more money to save and put away anymore. So there's a lot of things out of our control. And so we need to look at what can we do to control our money? What can we do to control our destiny? And let's get set up on that path. And I'll get into that as we go. So Chris is saying yes, back in 2008. Absolutely. So if the Social Security Administration tells us it's happening, what are some reasons other than a sudden collapse of the market and your retirement funds? What are some other things that lead to people not being able to achieve their financial dreams? What are some things that lead to not being able to retire the way that you want to? Put them in the chat box. I want to see what you guys think. What are some things that limit people from achieving that financial success? I just want to see what you guys say. Okay, so Mark says lack of knowledge, debt, absolutely, debt, knowledge, fear is a big one, time, health, money, okay, underinsured, yeah, okay. All right, so those are all really, really good answers. And you're absolutely right. So a couple ones real fast: lack of knowledge, fear, time, money, those are all things that are easily overcome. Okay. Lack of knowledge is what typically leads to fear. Because if I told you right now that if you were to take $100,000 and in the next 3 years, you follow what I tell you, you'll make $1 million. How many of you would be fearful of just handing me $100,000 if I told you that? Right? Probably everybody's hand should go up, because what do you know about that deal or about that opportunity? Nothing, right? So you have a lot of lack of knowledge, and that leads to the fear that, well, I don't want to do that because who knows what's going on. But if I sit here and I lay out a proven plan, exactly how you're going to accomplish that, and it's backed by data, it's backed by experience and by proven track records, and you can see the path forward, how many of you might start to open your mind and say, okay, well, that makes a little bit more sense. And then if I go on to keep explaining, and your $100,000 is going to be protected, where if something does go wrong anyway along the process, you're going to be able to recoup that $100,000 so you have no loss involved at all, right? How many of you would be a little less fearful then, right? So the more knowledge you gain, the fear goes away, and the more you're just natural human kind of, mindset goes away, where you're like, all right, well, let me start getting into this a little bit more, right? So if we can teach you, when we can show you, then it's just up to you to do what? Take action, right? So we can teach you, we can show you everything, but it's up to you to take action. So keep that along, because the other thing, when I was a financial advisor, I witnessed this firsthand. And ever since, I've worked with I've worked with people one-on-one. I've worked in group settings. I've done group trainings, one-on-one settings for many, many years now. And so I see it all the time. And, most people are not ready for retirement, or they don't have the money putting away that they want to. So what the Social Security Administration says, from my experience, is spot on, right? So if we can show you this stuff, then you're able to go out there and take action. And as a financial advisor, the one thing I learned was the number one reason that people do not achieve their financial goals in life. Do you guys know what the number one reason is? The number one reason people do not achieve their financial goals in life. It's actually procrastination. Procrastination is the number one reason. I mean, think to yourselves, how many times have you ever said to yourself, all right, well, I saw this really cool concept. on how to make money, or I learned this really cool investment strategy, or I saw this really neat idea. And I said to myself, all right, I'm going to get started with it tomorrow, or I'm going to get started with it next week, or I'm really busy this month at work. And, November's a new month. So I'm just going to start it in November. And then what happens? You look back, right? And all of a sudden it's 3 months later, 6 months later, a year later, 10 years later. And all of a sudden you're looking back saying, man, what if I would have done that? I mean, what if I would have bought Tesla when it was, $100? What if I would have bought Bitcoin when it was 20 bucks? What if I would have whatever, right? What if I would have bought real estate in 2009, 2010, 2011, 2012, when it was way down here now? So you always hear this, right? And I hear this on the phone all the time whenever I do the money multiplier calls. Hey, I learned about infinite banking like 5, 6, 7 years ago, 10 years ago, but I was doing other things at the time. It didn't really make sense. So I kind of forgot about it. And now they're telling me like, damn it, I wish I would have done this 10 years ago when I first heard about it, right? Where was Chris then? Because Chris has an incredible ability of being able to explain this stuff in a way that everybody can relate to, right? So it's one of those things where you just got to eliminate procrastination. You got to understand successful people take action every single time. And I saw some people write in there when I was asking that question, they fail to act, no goals. Absolutely. So fail to act is just lacking action. Goals are very important though also, right? So if you don't know where you're starting now, how are you going to know where you want to get to? And more important, if you do know where you're starting now and you know where you want to get to, how are you going to get there? Because think about it. If I'm going to drive to Buffalo, New York right now, there's a bunch of ways I could go. I could take 95 all the way up the coast and shoot over. I could take the turnpike to this road to that road. I could go all the way out west first. I could, drive along the beach road halfway up and then shoot over. Like there's lots of different ways to drive across the country, but is there a fastest and more efficient way to drive across the country? Absolutely, right? So you want to have that game plan in place as well. And that's what this is all about, is being able to get that education, put that plan together, and then start following that. And I guarantee you, if you take and internalize what you learn here today, and you internalize and take action on what we teach you through Money School and the Money Multiplier, I promise you, I guarantee you, you will be in a better financial position next year, in 3 years, in 7 years, in 15 years down the road than you are right now today. I can promise you that, okay? So let's get into this a little bit. So where are you right now and where do you want to be? Every one of you that's on this call, take out your phone or take out a pen and paper and write that down. You don't have to share it with me. Don't put it in the comments. I just want you to write it down for yourself. Where are you now financially? And you don't have to get into the details. Just put on a scale of 1 to 10. Are you super comfortable where you are now? Are you really, really hurting right now? Or are you somewhere in between? Scale of 1 to 10. And then where do you want to be? And not a scale of 1 to 10 of where you want to be, or specifically how much money you need. Maybe you don't know how much money you need yet. That's all part of the process. That's all part of that steps. But where do you see yourself in the future? Like, do you want to, just live in a little mobile home somewhere and have a very simple lifestyle where you drive a golf cart around and hang out with the neighbors? Do you want to have fancy boats and private planes? Or do you want to be somewhere in the middle where you're playing golf a few times a week and just don't have to worry about work, where you're taking care and hanging out with grandkids and going on trips and things like that? So where do you want to be? And write that stuff down, because that's going to help us create this plan and exactly what you're going to need to go to get there. Because I guarantee you, if I was to ask every single person, we have almost 150 people on here, right? If I was to ask every single person right now, where are you starting? I would get so many different responses. Everything from I'm $100,000 in debt, living paycheck to paycheck, to I have a few $1,000,000 put away in various retirement accounts, and I'm just looking for smarter ways to do that. So the strategy for somebody that's starting down here is going to be a lot different than the strategy of the person that's starting up here. But here's the beautiful thing about what we teach is these strategies, techniques will work for anybody and everybody, if you're willing to learn and follow what we teach you. I'm not saying every technique we teach works for everybody, but every technique can work for your situation, okay? And one of the biggest things that we do is, for example, through the Private Money Club, is we connect these people, okay? So one of the things I'm gonna talk about in a second is active investing and passive investing. So what the Private Money Club is able to do is take someone that's down here starting out, that needs to be an active investor because they got to build that wealth first, and we connect them with somebody up here that's already done the work, and they just want to put their money to work for them so they can go out and have fun, where they're creating that passive income that's generating money for them without doing any other work. And they're going to help that person achieve their goal. How many of you right now love the idea that what you're going to be doing following what we teach you is going to help other people? Do you guys like the idea? If you help enough people, that you're going to get what you want out of life? Do you guys believe that? Yes or no? Do you believe that if you help enough people, you also will help yourself along the way? And are you guys okay with that? Are you guys okay with that? Because if you've ever seen our preview events before, I say this on every single one because it's something that I've said for a very long time. And this is how I live my life. If you're here right now to learn how to get rich quick, and you don't give a shit who you run over or step on along the way, then get off. Okay. And I'm dead serious about that. I've kicked people off of my coachings before. I've kicked people out of our networks before because they're piece of shit people. And those are not people that I want to work with. Okay. And we're never going to let somebody in like that. So if you're here to make quick money, you don't care who you step on, this is not for you. We don't want you. But if you're here for the long term and you understand that if you can help other people, you help yourself along the way and create win-win situations, then you're 1000% in the right spot right now. So that brings up, let's talk specifics. What do you have going on? Think to yourself. Active investing, passive investing. All right. So I got my buddy back here, Super Buddha, Good Fortune. Got this from, it's a signed and numbered edition. Super Buddha sells artwork to the Pope. So I figured if I could buy a copy of his print that was signed and numbered and limited to 100, it was pretty cool. So I can pick that up in Secret Knock. Again, another networking event, right? So these masterminds that we attend, just amazing, the network that you connect to. I mean, I give Super Buddha a call who sells art to the Pope. Like, how cool is that, right? So the connections you make along the way are so much fun as well. So let's talk about this for a minute. Passive, active. Okay, so passive investing versus active investing. So tell me what passive investing means to you. Just tell me what you think passive investing means. Lending, walk away, set and mostly forget. I'm basically too lazy to do the flips myself. Okay. Money working for you, income without work. It happens in the background, mailbox money. Okay. Absolutely. You guys are on perfectly. So passive money is money that we take and we put somewhere. And then as they say, we walk. Let's see if I can draw a little person here. A person, boom, boom, boom. We get that and we walk away. We go do something else. We go play and we live our lives and we do whatever we want to do. So we put it in here, and then what the passive investment does is it starts paying us. All this money starts coming back to us while we're out here playing and doing whatever we want to do. So plain and simple, that's what passive income is. And we'll talk about ways to generate passive income a little bit later. I just want you to get the basics of it, okay? And then what does active investing obviously mean? So active investing means you're actively doing the work to create that income, to create that money, okay? A great book, if you've never read it, is anything by Robert Kiyosaki and Sharon Lechter. Rich Dad, Poor Dad, start there and then go on to the Cashflow quadrant. He talks a lot about the 4 quadrants of where money is and where you are between a small business owner, an entrepreneur, a W-2 employee, and a true passive investor. So those are excellent books that really drive these subjects home that I highly suggest to every one of you. So active investing means you have a house. For example, we use real estate investing as an example here, all right? And this little person here, they have to spend their time getting a hammer and hammering out this house to do all the work, right? So are you starting to see how we could connect the pieces? So if this active investor is doing the work, and let's say maybe they're one of the people I was talking about before that's starting down here that doesn't have a lot of money already. So what do they need to be able to buy this house and do the work? They need money, right? And then we have this passive investor over here that's out there. Let's see if I can draw a golf club, right? So here's a golf club So they're out there golfing, but what do they have? They don't have the desire to go do the work, but they have the money. So they're able to take that money, give it to this active investor. The active investor puts it to work. And then, like I said before, the active investor pays them the passive income for them helping them out. So win-win situation. This passive investor gets the money, putting their money to work, and gets the passive income coming in. This active investor gets the money that they need to be able to do the work on the homes to generate wealth for themselves, and they're willing to pay that person to do so. So it's little win-win situations like this that we're going to be talking about. Okay. Does that make sense to everybody? I know it's very basic, but I just want to make sure we're all on the same page going into this. Okay. So this is the first step, is start thinking to yourself, are you a passive investor or active investor? And maybe you're both, right? Okay. Now, once we decide what type of investor you are, we'll start to be able to know which strategies are going to be right for you as we start to implement this stuff. All right. So now I want you guys to do is think about, now you know what type of investor. Again, you could be both, but primarily which type of investor are you going to be, right? So now that we know what type of investor, let's think about where your money is. Okay. So just think about where your money is for a minute, and go ahead and throw some answers out. Like, where is your money and where are you putting money? Okay. So you get a pay, let's just assume you have a job. All right. So you have a paycheck coming in regularly. Where is that money going? And any money from the past that you've saved, whether it's in retirement accounts, whether it's in savings accounts, whether it's in businesses that you've invested in, like that you own yourself, like, where is your money going? I want to see that. Where is your money going? Okay. Food. Let's see. Stocks. Okay. 401k. Someone else said IRA. Bills. Investments, collectibles. Okay. All right, investments and collectibles. All right, and you guys are starting to get a lot more specific now. Shauna said cars and motorcycles. Okay. Absolutely. Okay, cars and motorcycles. And I know some people are starting to put in here specifically where it is: private bank, policy, self-directed IRA. Okay, yeah. So those are more, yeah, definitely gold and silver, mutual funds, and crypto. So stocks, we can do mutual funds. Investments, kind of crypto, right? Okay. So all right, perfect. Cindy said knowledge. I like that. Investing in herself. Is there anything wrong with investing some of your money into yourself so you can learn new strategies? Jokes. Jokes. Okay. All right. So now, let's talk about this for a little bit. All right. So there's always going to be, let's look at things first off that are kind of necessary, right? So food and bills. Would everybody say food and bills are pretty much the necessity, right? Even your home that you live in, your shelter, right? And then I saw some people putting in there that money's going to inflation. How about taxes? Inflation and taxes. How much of your money goes towards those things, right? So here's things that we need to look at. So first off, they're telling us right now, and by the way, if you've been told your entire life to go get a job, invest in your 401k, pay into Social Security, all this stuff that you're told to do, and one day you'll be able to retire the way that you want to. If we're now told by the Social Security number, according to this, to the data, and according to our real life experience, that 95% of people, that's not going to happen for them, even though they've been told that their whole life, why are you still listening to what they say? Right? So let's think about this. And for just a minute before I go on, inflation. So somebody brought it up, I want to talk about it. So inflation. I saw they came out today with new data that says inflation's down for the third straight month. It's at like 5.4%. But what do they do to arrive at that answer, 5.4%? What are they excluding from that? You guys can go look this up. 5.4%, but it excludes shelter, energy, and food. So we have inflation going at 5.4, but it excludes shelter, energy, and food. What is rising the most right now in this country? Where's your home price right now compared to 18 months ago? How much are you paying for gas right now compared to 18 months ago? How much are you paying for natural gas up north right now as winter's about to hit? What are you expecting these companies are going to charge you? How much are you paying for food? How many of you seen an increase in food prices at the grocery store in the last year? I just was at the store earlier and my son loves specific things to eat. And there's like, some of this stuff's not even there right now. Like, it's really bizarre what's going on. So they're saying inflation's high. They're not saying it's high, but 5.4% inflation is crazy high, right? And that's excluding all the stuff that are necessary, because if you don't have shelter, where are you going to live? If you don't have food, how are you going to live? If you don't have energy, how are you going to live? So they're excluding like the most main things that you need to live just to at least get to this number. So it's just crazy what's going on, right? So absolutely. So if you have money sitting in a savings account right now, somebody said savings, right? Where's your money? Savings. I did see that on there. So if you have money sitting in a savings account, what's that money earning for you? 0.01%. Is 0.01 smaller or bigger than 5.4? It's a lot smaller, right? So money sitting in a savings account is losing money every single day right now. What is, all right, so that's inflation, right? So we have to first find a way to at least keep up with inflation or find, figure out ways to take advantage of it. Taxes. What are taxes doing right now? And what are all the proposals that are out there right now for taxes? I was talking to somebody on the phone this morning. I'm not going to say the names. I think they're on here, but they were telling me that in California, if you make 60 grand a year or 400 and some $1,000 a year, you're in the same tax bracket, right? I don't know if that's true. I don't work in California, but regardless, taxes are crazy right now. In some states, taxes are going up across the entire country. So they're going up and up and up, right? So these two things have a huge factor in why people are not able to retire the way and when they want to. Those are wealth killers. They destroy wealth, those two things right there by themselves. So that's something we have to keep in the back of our minds, all right? So what else are we doing with our money? So we talked about food and bills. This is part of the necessity that inflation is taking over right now. So we know that's going up. So first off, we got to hang with that. Cars and motorcycles. Unless you live in a city, odds are you need a car or some kind of transportation to get around, right? Everybody owns cars these days, multiple cars. So I would consider like your car a necessity. All right. Do you need a brand new car every few years? That's $50,000. No. Can you drive a 20-year-old car? Yes. But is it a nice feeling to get a car every 3, 4, 5 years and get that new car smell? And, what if we could show you a way to pay for every car that you'll ever buy, drive, and own in the future? And we will show you exactly how to do that. And every single one of you that registered for this webinar today, and that's on here right now, you should have been emailed a copy of this cool little ebook that we came out with called Drifting Away from Traditional Car Buying. This will get you into the basics on how you're going to be able to use our strategies to pay for every car you'll ever buy, drive, and own. And then we can send you trainings, and then you can hop on the phone with myself or one of our other money mentors, and they'll be able to help you get this started so you can eliminate that car from now on, right? In the future. Not right now, but we're setting ourselves up for the future. So now we're going to eliminate that. Okay. We're just finding ways to get past all the craziness that's going on and set ourselves on a course of growing, right? And I'm not going to, getting into things like if you're starting down here and don't have a lot of money, like don't get Starbucks every day and, look at where your automatic subscriptions are going. Like things like that are all good to do, especially if you're really struggling, like living paycheck to paycheck. Just try and clear up a little bit of money. I mean, if you can put a few $100s a month away, if you're young in your 20s or 30s, like that's going to significantly make a big difference for you 10, 20, 25 years down the road. Okay. But I don't want to talk about that because it's not fun, right? Nobody wants to budget and cut things out of their lives. I want you to have your cake and eat it too. I want you to be able to live the lifestyle you want right now, and also set yourselves up to be able to retire and live the future that you want to with you and your family down the road. To me, that's what's fun. And that's what I'm teaching here today. Okay. So let's have some fun. All right. So So stocks and mutual funds. So where stocks and mutual funds, there's two ways to buy stocks and mutual funds. In what's called a non-qualified account, which is just a brokerage account that you're going to pay capital gains taxes and taxes on if you're trading and stuff like that. So there's no benefits to it other than you're trading and making money, right? So the other option would be to put it into a retirement account. Retirement. Okay, you guys can see it, right? All right. So the other option to put into what's called a qualified retirement account. So qualified retirement accounts are things like 401ks, IRAs, SEP IRAs, simple IRAs, Roth, and then you get into traditional versus Roth IRAs. And the only difference there is the tax. It's either pre-tax with a traditional, tax deferred growth, pay taxes later, or in a Roth, it's after tax money going in, tax-free growth, and you never pay a dime of taxes on any of the profit. My eyes, the Roth is the way to go. A traditional, you're just putting off the mandatory taxes, the inevitable taxes you're going to pay one day. And again, what are taxes doing? They're going up. So why you're putting off paying taxes now to pay them later when they're going up? Anyways, that's a whole nother discussion. I can get into IRAs and retirement strategies with you all day long. I'd rather save that for like a one-on-one call, find out specifically what you're doing. Does it make sense to move some of it into a Roth now and let that grow tax-free? Does it make sense to withdraw some now? Does it make sense to do a 401k loan? So how many of you have 401k? If you have a 401k active at work right now, write 401k. If you have an active 401k at work, write 401. All right. And while you're doing that, investments, so things like crypto, collectibles are a very specific type of investment. Like most collectibles aren't even allowed inside of qualified retirement plans. So things like artwork, things like, wine, specific like types of coins, like if you ever had like your grandfather or something that collected coins, like these are collectibles. Those are very specific. So we don't talk a lot about that. There's a market for them. Absolutely. But it's very unique. So, but things like you guys were saying, stocks, mutual funds, ETFs, bonds, crypto, these are all investments that you can have in a retirement account, right? So if you have an IRA or an old IRA right now, or an old 401k, not an active 401k, an old 401k or an IRA now, odds are that money's invested in stocks, right? Odds are that money's invested in the stock market one way or another. If it's at Fidelity, if it's at Morgan Stanley, it's in ETFs, it's in stocks, it's in mutual funds, it's in something in the stock market, okay? Now, let me ask this question. I'm gonna clean this up. What is the stock market doing right now? Breaking records, right? Let me ask you guys this question. I want to see what the temperature of the room is. In the next 12 to 18 months, do you think the stock market will be 10% or more higher if you do right up? Or do you think the stock market will be 10% or lower right down? I'm just curious what you guys think. If you think in the next 12 to 18 months, it'll be up 10% or more or down 10% or more? I'm just curious. All right, you guys are all responding here. Down, 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 down. Eric says up. Jim says crash by 30% or more. Down, 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 down. All right, up. Here's another up, down, taper down. Can I open my eyes now? Down. Okay. So I will say, I'm in the thought process that we're at all-time highs right now. Technicals, studying history, everything is leading to the stock market's going to have a correction. I mean, we're on a 13-year bull run right now when the average correction happens every decade, every 10 years or so. So we're way beyond where we should be. There's not a whole lot of reason that we're up here right now. And people like Harry Dent, a lot of different economists out there. I just mentioned Harry Dent because he was on our 3-day a couple weekends ago, but they're showing, and they study this stuff for many, many, many years. And a lot of people like Michael Burry, that called the 2008 financial collapse, are saying the exact same thing. We're printing more money than has ever been created in history right now. I think 40% or more of the money supply in the history of the United States has been printed in the last 12 months. There's just a lot of signs and things happening right now that lead towards a correction or a serious crash that's coming up. Okay. So what you got to do is ask yourself, if I have a 401k or if I have an IRA and all that money's in stocks and they're at all-time highs, what should I do? What should I do? Okay. So people like Warren Buffett tell us a very easy way to invest is do it for the long term, right? But he also says buy low, sell high, and don't lose money. All right. Seems very simple. So if we're at all-time highs right now, and you happen to be one of the people that agrees that the market's going to come down, the question then becomes, when do I make my exit? Okay. My opinion is, why risk the little bit of upside potential that's left when it starts to fall, it's going to fall very, very quickly where you might get stuck way down here, right? So to me, it's a good time to start thinking about that. And then once we decide when we're going to start to make this change, it becomes, how do we start to make this change? And then what do we do? Okay. So how? Now, I had a couple people on here before that were starting to bring this up. So I saw some people talk about okay. So what are called self-directed IRAs. So if you have an active IRA at Fidelity, at Morgan Stanley, at Charles Schwab, and by the way, Charles Schwab is in all these brokerages has been doing this now for a few years. I was talking on the phone with somebody earlier this morning, and they said, hey, I had my old government retirement account. Is very similar to a 401k. When I left the job a couple of years ago, they gave me an option of rolling it over to a self-directed Charles Schwab account. And so she went ahead and did that, and the money's now at Charles Schwab. And it's tricky because she was told it's a self-directed Charles Schwab account. But I promise you this, I'll bet you any amount of money, or I'll bet you a book, or whatever you want to bet on. If you call Charles Schwab right now and you say to them, hey, I would like to lend money to Chris Naugle on a real estate flip that he's about to do with my self-directed Charles Schwab IRA. Or, hey, I would like to lend money to the Safari Fund. Or, hey, I would like to go out there and buy actual gold, right? Like physical gold with my IRA. They're going to say, no. You can buy a REIT, which is a real estate investment trust, or you can buy, an ETF that's backed, that's based on gold and silver, or that does like gold mining. We have those ETFs available, something like that. But they're not going to let you actually buy the actual physical thing, or like even a house, right? Even with you can even go buy a rental home with an IRA if it's a true self-directed account. So these brokerages have gotten a little dirty with their wording in it, but what they do allow you to self-direct in is stocks, individual stocks, options, bonds, things like that, right? So it's a little trick right there, but just keep that in mind. All right, so what are your options? If you want to get out of the stock market, but you need your money to grow because you can't make it just sit there and cash and lose money because of what? Because of inflation. So you need that money working. So what do you do with it, right? So self-directed IRAs are a great option for that, because self-directed IRAs are going to give you complete control, because they now allow you, there's no penalty for doing this, for moving your money from Schwab to, for instance, Horizon Trust Company or one of the other self-directed custodians out there. You can transfer your money over. And if anybody needs an introduction, just shoot me an email, snaggy@chrisnaugle.com, snaggy@chrisnaugle.com, and I'll make an introduction to you with Brandy at Horizon Trust, and she can help you with all the self-directed stuff. So if anybody wants that introduction, just let me know. So what they'll do is they'll transfer the money from where it is now. There's no taxes, there's no penalties, there's no 10%, no matter what your age is, none of that matters, but it now puts it into this account for you. And maybe when you do that, you want to take some of it and take it from traditional and turn it into a Roth. Maybe, pay the taxes now, no penalty, but pay the taxes now. And then anything you invest in from that point forward is tax-free profits, tax-free. You take $100,000, convert it into a Roth self-directed IRA, go make some smart real estate investments over the next couple of years and turn that into $1 million. You'll never pay taxes on $900,000 of that money. Do you guys like that idea? So very, very easy to do. So that's one option. If it's a active 401k, unfortunately, you typically are not able to do this. Okay. They're not going to let you transfer an active 401k out of the active 401k. There's certain situations where if you're a little bit older or approaching retirement or been there for a long time and the administrator is set up a certain way where you can or can do some of it, but typically across the board, you can't. So then it says, okay, well, my money's in the 401k. A lot of times I don't even have options to buy bonds in there or government-backed securities or anything like that. 401ks used to offer that stuff. They don't anymore. It's now like some kind of like low risk or medium risk or high risk or different types of funds like that, right? But they all have stocks in them. So if we're in agreement that the stock market is going to come down, what do you do with the 401k? Well, a couple of things. First off, how much are you contributing? How much are you putting into the 401k monthly right now? So if your company, let's say, says if you put in 6%, we'll match 6%, and you're putting in 10%, maybe you say, okay, well, that I'll put in 6% to get the free 6%, but why am I putting in that extra 4% each month into something that's probably going to drop in the next few years, right? Or, maybe there's no match. Why are you putting anything in there right now, right? Or, so can we make some adjustments there? Also, the 401k, what else can you do with that to get the money out without paying any penalties or taxes? Did you guys know you can do what's called a 401k loan? You can actually take a loan from your 401k for $50,000 or up to 50% of it. Okay. So why not maybe, let's say you got $100,000 in your 401k. You can't take all of it out because you don't want to pay the taxes and penalty, but why not take $50,000 out? Do you pay interest on that 401k loan? Yes. You pay typically about 3 percentage points above prime. But where does that interest go? The interest that you pay on this $50,000 loan goes right back into your 401k. So you're still growing your 401k. You're just paying interest to yourself to do so. All right. So it's a win-win. Now we have $50,000 cash that we have control over. Okay. It's no longer locked up in the stock market out of our control. Because like I said at the beginning, what companies do, how the stock market is driven, like whether it goes up or down and what occurs with these large, humongous corporations. I mean, things like Facebook and Amazon. I mean, one little regulation, like if the government was to say, we're taking away the 230 protection, 215, 230, whatever the protection is that the social media companies have, what's going to happen with their stocks, right? If something happens with Amazon where China just says we're shutting down all exports to the US, like I'm not saying that's ever going to happen, but what if something like that happened? Or, I just heard that container ships crossing the coast right now from China into California in January, it cost $5,000 to ship one, which when I was doing this back in 2000 and when I was running an e-commerce business back in, when was this? 2016 or so, it was like $3,000 for a container ship. But anyways, in January, I heard it's $5,000. In July, it was $10,000. And now this month to ship a container across is $20,000. So those prices are going up. So could that affect what happens with it? Absolutely, right? But it's completely out of your control. You have no say in how any of that works. And that's why as a financial advisor, like the stock market, I always understood like the technicals. I understood how to read it. I understand why you do it. It's always going to go up over time. Like it all makes sense to me. But when I compared putting my money into something that I had no control over, and then I was introduced to real estate investing, it just all started to click for me. Because think about real estate for just a second, right? If I go look at a home right now, across the street from, let's say 3 miles down the road from my house, I can go and I can see that house and I can immediately run some comps and know what it's worth. I can look at it and say, okay, it needs a roof, it needs a new kitchen, it needs bathrooms, it needs some flooring, it needs some paint on the walls. We need to tear down this wall. It's going to run me about $60,000 to do all that work. So if I can buy it at this price, I can put that money in it. I know it's worth this price when it's fixed up. This is how much money I'm going to make. I have complete control of that deal from start to finish. All right. And I'm not saying it's completely risk-free. I'll get into that a little bit more in here in a second on a little bit more detail when it goes into analyzing real estate deals and what you should be in and what you should stay away from right now. But let me say this. When it comes to real estate, it's something that I can actually control every step along the way. So to me, that makes a lot more sense than this, where it's completely out of my control and I don't know what's happening. And here's the best thing about real estate too, is you can make money in real estate in any market. I know, right? So you can make money in an up market, very easy. You buy the home and rent it out. And a few years later, through the appreciation, you're gonna have a bunch of equity. You can either sell the house or tap into the equity and put that money to work. And along the way, you have kind of passive income coming in, right? Rentals are not completely passive, but you have somewhat passive income coming in through rental incomes as you're building the equity. So that's easy. In a flat market where home prices are not really going up or down, it's just kind of a flat market, right? No big deal. We can still go in and we can drive value in property. So I can buy a house that needs a lot of work. Because your average home buyer, guys, your average retail home buyer, they don't want to buy a house and do a bunch of work to it. So, most people want to just buy the home. It's ready to go. They move their family in. They're busy with their jobs and their work and their kids and sports and everything that goes along with life. They don't want to move into the house and have construction crews in there all day long while they're getting the kids ready for school. And when they get home from work at night, when they want to, watch football and enjoy a beer, like they want the work done, right? So that's where investors provide so much value to communities. And I love like when an investor will go in and start fixing up entire neighborhoods. Like it's really, really cool to me to see that happen. And the neighbors love it because the people that already live there, it drives their home values up. The people that are buying in that neighborhood are buying into a nicer neighborhood now. Like it's a win-win across the board in many situations, not all situations, but in many situations. So that stuff all makes a lot of sense, right? So, and then when you couple all of that along with, who owns real estate, right? So every multi-millionaire, they call them ultra wealthy, like the million billionaire characters out there, they all own a lot of real estate in their portfolios one way or another. Okay. Think about McDonald's. And I use this example a lot, but it really drives the point home. I mean, McDonald's, a lot of people think they make money because they have such efficient systems. They don't pay their employees much. And basically they're just pushing buttons. Like, have you ever seen it at McDonald's? It's all automated. Like they literally push a button, the machine goes down, it fries the fries, it pops up, they take it and they put it out. They push a button and the burgers flip and things like that. It's pretty crazy. Like the systems are amazing. For somebody that loves systems and processes, it's very fascinating. But McDonald's doesn't make their money off of flipping burgers. McDonald's flips burgers to buy real estate. Did you know all McDonald's franchises are owned by real estate that McDonald's owns? And then what McDonald's did many, many years ago, back in the 70s and 80s, when they were really growing and expanding, McDonald's understood that not only are they going to buy the land that they're located on, because where are McDonald's? They're everywhere, right? Every rural community has one at the one stoplight in the town, to every major city on Times Square, like, everywhere across the world, and every suburb, obviously everywhere. And they're all over. And what McDonald's did is they said, okay, we'll buy this, but we're also going to buy the real estate on every part of this intersection. And then what they did is they say, okay, our McDonald's is here and we're going to rent this out to Burger King. We're going to rent this out to Wendy's over here, right? So why would they rent out land that they own to the competition? Because they don't care. They know that they make their money off of that real estate, off of owning that land, off of being an investor, right? So that's, so if McDonald's does it, why would we not? And then you look at banks. So those of you that have been following us, we talk about mimicking the banks, doing what the banks do. When we talk about privatized banking, the infinite banking concept, why do we do it? Do you guys know the number one purchaser of whole life insurance in this country, who they are? I just gave you a clue. Banks, right? So look up BOLI, B-O-L-I, bank-owned life insurance. That's why when you walk into a bank, everybody's a vice president. Because by making them vice presidents and executives of the bank, they now have an insurable interest on that employee, and they now can buy a whole life policy on them. And on top, so we mimic what the banks do. So where do you see banks in this country, in this world? Go to any major city, and almost every single major city, the tallest skyscrapers are banks. Look at the name. Next time you're in a city, look at the names that are on top of these tall, beautiful buildings, skyscrapers. They're banks. Why do they do that? Because they own the real estate. They're buying the real estate. Why does Wells Fargo need to have a branch every 2 miles? Go drive around. There's Wells Fargos everywhere, right? There's Chase Banks everywhere. When's the last time you actually went in a bank? Everybody does banking online now. You can call, you do it all online. Like, you don't even need to go in banks anymore, but they want the real estate. They're buying the real estate. So if they all are doing this, the ultra wealthy are doing this, successful business and corporations are doing this, and banks are doing this, why would we not buy real estate? So I didn't want to make this an entire training just on real estate. We could do that, but I am going to get into real estate a little bit more because it's very, very important that you start to understand this stuff. And this is a big part of taking back control and being able to control our money. Are you guys liking this so far? Are we good? I'm going to keep rolling. All right. So just to recap, take back control, get that self-directed IRA, if that makes sense. Figure out what you're doing with your money, with your 401k. Can you take a loan out, control that money now? Can you put less in to free up more money to be able to do other things with it now? But if you think the market's come down, now is the time to start planning, okay? All right, so if we think the stock market, so let me ask this. Since we're talking a lot about real estate, before I move on, how many of you think the real estate market is gonna come down in the next 12 to 18 months? Say up or down if you think the real estate market is going to go up or down. Okay, so I think downs are winning, but I see more ups than downs. Real estate market is going down like a prom dress. All right, up, 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 up. Okay, so I think we will see a correction in the real estate market. But here's a couple things that I think about it, and this is from experience. This is from studying a lot of history and living through a lot of 08. You know, I got started in real estate kind of right before the collapse hit, and then I got real into real estate right afterwards. So I'll kind of show you some things and why I think. So if we're studying history, what causes this stuff? So right now, real estate is very, very high, okay? But if we look back to 08, 08 was the last large housing collapse that we had, right? So what happened in 08? House prices fell. They fell very, very hard, 50 to 80% in a lot of parts of the country. But why did that happen back then? Do you guys know why? Why did the real estate prices fall and fall so hard? Subprime market, right? So it's called predatory lending. So there was a lot of what we now call predatory lending that happened back then. And what happened is, leading up to 2008, what were the banks and financial institutions telling average everyday Americans, right? And again, we're not taught financial education in this country, in high school, in college, or otherwise, except from people like Chris, people like myself, people like Robert Kiyosaki, these different types of financial education experts out there. But we aren't taught this stuff. So if you're told by a financial institution, by a lending company, by a bank, by the media, whoever, that you're doing something right, why would you not do it? So what was going on back then, right? What was going on with predatory lending? Well, we were told, hey, go out and buy a home. Home ownership's the American dream. Don't worry about the prices, because the prices leading up to that were skyrocketing. But they were saying, don't worry about the money because you're going to buy a house here. And what's that house going to do? It's just going to go up in value. It's just going to go up in value. So don't worry about it. And so what the banks started to do is they started to pitch what are called ARMs. Okay, what does ARM stand for? Adjustable rate mortgage. You also saw a lot of what are called balloon mortgages, all right? So a lot of adjustable rate and a lot of balloon mortgages. These were the ones that really hurt though, these balloons. And what these were is they basically said, we're going to get you into this house. You're going to have a 0%. You're going to have zero money down first off, but you're going to have a 0% interest rate. Okay, that's what adjustable rate mortgage means. You're going to have a 0% interest rate, which is going to allow you to have a mortgage payment of, let's say, $1,000 a month. Okay, for 3 to 5 years. And then this property is going to shoot up, and then after those 3 to 5 years of having that real low payment and everything, then what's going to happen is you're going to adjust, and the balloon is going to come due. And then let's say you're going to have $2,500 dollar a month mortgage payment, because you're going to have to cash out of it. You're going to have to refinance it with these balloon mortgages, and you're going to have to redo it all. So it's going to up you. But what the banks were telling people was, don't worry about this. Don't worry about this at all. Because what is real estate prices doing right now? Real estate prices are going up and up and up. So you're buying right here with this arm. You're not going to be able to afford it when the balloon payment comes. But at that point, that home's going to be worth $300,000. So what are you going to have in there? You're going to have equity. So what you're going to be able to do is you're going to be able to tap into that equity at that time, and you're going to be able to use that equity from the home going up to be able to cover this higher payment and this balloon payment when it comes due. Okay, so that's one thing that they were doing. What are some other things that they were doing? I'm trying to see if you guys are saying them on here. I wanted to hit that one first because I saw someone say it. Okay, these are other parts of predatory lending, right? So we have the arms, balloon. Okay, I'll just write it down. I don't see it. So we have what we call a stated income. We had stated income loans. We had zero money down loans. Do you guys know what stated income loans were? Who qualified for a stated income loan? My dog. Everybody, right? So a stated income loan was literally like it says. They would ask you, hey, how much money do you make? Oh, I make $150,000 a year. I mean, even though you're working at Chili's as a waiter at 20 years old, but whatever, right? I make $150,000 a year. So people were stating their income and getting loans for way more. They were putting zero money down. They had what are called, you guys remember the no-doc loans? The no-doc loans were no documentation required. So that was part of the stated income where you had to prove nothing. And then they had the, somebody said it on there, 105% loans. And those were, and a lot of times it was even higher than that back then. So you could literally say, I'm buying a $200,000 home, but I need a loan for $250,000. So I'm gonna put 50 grand into the property, and without having to prove any of the work needed, without having to show anything, without even having to qualify or put any money down, all of a sudden you have a loan for $250,000. You buy the house for 200. So yes, those were good times, right? Good times for some people. Did they turn out to be good times for most people? No, right? Because, and then what happened? All right. So we're going to go back to the banks. If you guys have been watching us, you know, not big fans of the banks for many, many reasons. So what did the banks do? The banks said, all right, well, all these people, well, the banks and then the institutions, right? The brokerages. So what happened is, they said, all right, they see everybody's having a field day here. Everyone's having great times. Everyone's having an awesome time at all this stuff. So they're making all this money. People are buying 10, 15, 20 houses. They're renting them out. They're selling them. They're doing all this stuff with them, right? And then what did the banks do? The banks said, well, we don't want to miss out on this party. We want to have some fun with it. So what did they do? They created what are called CMOs. You guys know what CMOs are? Collateralized mortgage obligations, okay? So what they did is they created what are called CMOs. And what collateralized mortgage obligations? It's a fancy word for saying this is now a investment instrument, basically like a stock that you could buy, that you can invest in, and they basically like buying a mortgage, right? So collateralized mortgage obligations. But what were these CMOs full of? 99% of these CMOs were full of these types of properties, those types of loans. There was 1% that had actual legitimate mortgages that were probably not going to default in them. But here's where they really got dirty. Greed, banks and institutions, right? Here's what they did. The banks got in with like Moody's and all the rating companies, the companies that rate investments, you know, like you hear of like AAA rated securities or AAA rated bonds, things like that, right? A++, like you see all these ratings. Guess what the institutions rated these things? A++. The safest rating you can give to a investment thing like this is what these things were rated at, okay? So they were A++. So then what happened is the big the hedge funds and the pension funds and everyday Americans like us that have 401ks, all of a sudden were buying these CMOs that were backed by all this stuff because we were told that they were super, super, super safe. All right. But then what happened? But then what happened? What happened is all of a sudden, these things started to come due. All of a sudden, people realized that when you say you have more money than you do and you're not putting money down, there's no incentive for you to actually pay for this thing when you realize you can't afford it anymore and you had no money invested in yourself. When you're getting loans without having to prove who you are, it's very easy to walk away from it. When you're borrowing more than the house is worth and you walk away, there's no money there to recoup and protect it. So what happened is these things started to fail. And when that happened, the entire stock market came down. The banks all had to get bailed out, billions and billions of dollars, which, by the way, how many of you guys got bailed out back then? Nobody. The banks got bailed out. The financial institutions got bailed out. They did, right? It's all set up for that, okay? So I just want you to understand, the banks are not your friend. We use banks for specific purposes, and that's it. We don't want them controlling our money. We don't want our money sitting in savings. We don't want them taking advantage of us. We want to take back control, okay? That's why privatized banking is by far one of the most powerful vehicles you can use for taking back control of your money. Our specially designed and engineered whole life policies, we mimic what the banks do and we throw it right back in their faces. So because of all this, so this is what happened in 08, all right? And that's one of the big reasons we saw the big crash. We saw real estate come down and everything kind of happened, right? Now, we don't really have a lot of this going on right now. This market's a little different. So while I do think, oh, and by the way, if you want to learn more about this stuff, one of my favorite authors is a guy named Michael Lewis. He wrote Liar's Poker. He wrote Moneyball. He wrote The Big Short. And a bunch of other really good books. But The Big Short is the one that I would highly recommend. If you haven't read the book, the movie's pretty good too with Steve Carell and everybody in it. But The Big Short, the book, is unbelievably good. And then read his follow-up books. He has one called Flash Boys that talks about how the stock market works now with these real microscopic millisecond trades that happen millions at a time through every second of the day, like all this stuff. So Michael Lewis, incredible author, highly recommend. You got to check it out. Nanoseconds, exactly. So here's where we're at now. So this market in real estate's a little bit different, right? So here's what I think about this. I think the stock market is crazy high right now. I do think we're going to see a pretty significant drop. Historically speaking, the real estate market there's typically signs that we will see happen in the real estate market that will allow us to maybe make an exit or prepare for when things do come down. Because I do think there will be a real estate market correction. I don't think we'll see a hard crash like we saw before, unless the entire economy just goes to shit, in which case that kind of all bets are off in that case. But I do think that we'll see a correction and it'll come down a little bit, or at least slow down significantly. But I think we're going to have a lot of signs and a lot of leading indicators to show us when that's going to happen. So I still think that real estate's a really good place to be right now, because we're going to have a heads up, so to say, on when things start to change in real estate. I think the stocks are going to get hit pretty hard, pretty quickly, but I think real estate's going to take a little time to catch up this time around. So when we talk about real estate, then what are those opportunities? All right. So if real estate, everyone just agreed, real estate's very high right now. Most people think it might keep going up or stay where it is, or maybe come down. So does that make real estate right now a good time to buy or a bad time to buy? What do you guys think right now, where we sit today? You think real estate is good or bad, right? Good or bad in the chat box. Bad, 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 bad. Depends on the deal. Thank you. Good. Depends on the numbers, but for most people, bad. Seller's market, good. Depends, it's high. Okay. So a lot of people are saying it's not a good time to buy real estate. All right. So you're still thinking like a consumer. You're still thinking retail. Let me show you how we think as an investor. Okay. Because we're still buying real estate. All right. I'm not personally out there actively buying real estate, but I'm actively investing in real estate deals passively. Okay. Chris is selling a bunch of rental properties right now, getting out of his active real estate. And Chris is doing a lot of private money lending right now. And who are we lending to? Super experienced investors that know how to play in this game and know how to play in this field. However, there's no way I'm lending my money on real estate deals on any deal out there. So let me explain what I mean. When it comes to real estate, besides all the facts that I talked about before, why I love real estate, the other reason I love real estate, as I mentioned, you can make money in up markets, down markets, sideways markets. And the main reason for that is because there's so many different types of real estate. Okay. So type in the chat box some different types of real estate asset classes. So what are some different types of real estate? Yeah, Miguel, Grant Cardone does a great job when it comes to real estate investing. Again, we don't do any coaching or training on actual real estate investing. I just want you to understand this is a huge part of taking back control of your money and being able to actually know where it's going and when you need to put it there and when you need to get out, more importantly. All right, so let me write some of these down. All right. So single family, multifamily, all right, single family, commercial. Yeah, Christy, crowdfunding, I'll hit that in a minute. Let's see, learn to buy real estate. Let's see, land, okay, land. Yeah, warehouse, commercial, apartments, kind of go into this. Apartments, trailer parks, okay. Mobile home parks. I was always told, it's so funny how political correctness works, right? Because I was always told that trailer parks is kind of a negative term, and not to say trailer park, you could offend people. But I feel like they're called trailer parks these days. I don't know why you wouldn't call it what it is. I mean, they're trailers, but mobile home parks. So mobile home park, RV parks. Okay. Yeah, people are talking about different funds. Okay. Vacation. I like that one. So Airbnb. So that's more of a, that's more of a way to use a property, but let's see, anything else? Senior living, kind of more of a way to use it. We'll hit that. Okay, I love the, okay, condos, rentals, right? And I know these aren't asset classes, but I'm going to use them in a minute anyway, so I'm just writing them down. The paper, okay, yeah, paper, that's a good one. What it means by buy the paper, it means buy the notes, buy the mortgages. Okay, all right, so you guys are doing great here. All right, billboards, group homes, yeah, those are, so self-storage is kind of, definitely, that's good. Almost goes in with land. It's almost more owning the land with something on the land that you're able to profit from. But yeah, self-storage units, we used to call them little tin cans that spit out constant passive income, because that's pretty much what they are. So, all right, so let's talk about these for a minute. So first off, single family homes, single family residential, just a house that you live in, a single family house. And actually single family residential can be considered a duplex. Even though it's kind of multifamily, a duplex, a triplex, or a quadplex. So a duplex is side by side or up and down up in New York. Triplex is just, 3 units next to each other. A quadplex is typically like a unit on each corner that's all shared by one roof, right? So anything under 4 units or 4 units and under is considered residential real estate. Anything 5 units or over under one roof is considered multifamily real estate, or not multifamily, but commercial real estate, just so you guys can keep that in the back of your minds. When it comes to loans and it comes to some different ways to evaluate the deals, they'll be evaluated a little bit differently, whether it's a quadplex or lower, including single family homes, residential real estate, or a 5-plex and above, which is considered commercial real estate. So let's talk about single family homes first. For me, so I'm going to switch on and put on my investor hat now, right? Okay, so now I'm thinking of this as an investor. So if I'm looking at single family homes, and I know that the real estate market is high right now, we're going to have a little time probably before we know that it's going to come down. If it does come down, what would I be looking for in a single family home if I was looking to invest in it? Okay. So let me explain what I mean. First off, I'd be looking at the area that it's located in. Okay. So where is that home located? Is it in a high demand area where if home prices start to cool and interest rates start to creep up and sales start to slow down, is there still a demand in that area for that home? Okay. What state is it in? Places like so many people have flooded to Florida right now, to Texas, to places like that even if there's a big change in the overall real estate market in the country, because of the demand and how many people have moved here and how hot the market got, I think that that's going to hold a little bit stronger, at least longer, if that makes sense. Again, this isn't '08. So we don't have like that constant wham that's going to happen, so we'll be able to see that. So location, where is the home? So that's one thing that I really look at. And then number two is time. And what I mean by time is if this is a flip, for instance, right? So I do a lot of lending to flips. So if I'm evaluating this deal and this project that the investor is about to do, the active investor is about to do on a single family home is going to take them 9 months to a year, which is pretty common for like a higher end flip. So if it's like a luxury flip, so let's just say like $1 million, $1.5 million, something like that, or above, it's going to take a little bit more time and effort to get that property rehabbed and get it up to speed, right? Because if I'm bringing in custom cabinetry and I'm doing a bunch of custom work in the home and it's real high end, it's a lot, it's going to take a lot more. It's going to take a lot longer. And a lot of times it requires a certain buyer for a home like that, that if the market starts to change, might not be there. And so if it's going to take a long time, if the market starts to correct when they're in the middle of this project, I don't want any part of that, right? Because the worst thing that you can do as a real estate investor is to be in the middle of the project and the market takes a turn for the negative. And then all of a sudden, where you're planning on selling that property, you have to make money. Now the market's here. And then it's on the market a little bit longer. It drops a little bit more. Now you're either at break-even point or you're losing money. So things like that are things that I would tend to stay away from right now. So look for the quick flips. Look for the typical 3-2-2s, like the 3-bedroom, 2-bath, 2-car garage, I don't want to say cookie cutter, but cookie cutter type house, right? Where somebody can go in as an active investor, as a rehabber, as a flipper, they can throw the standard paint on the walls. They can clean the place up, put some shrubbery on it, do like what we call a wholesale deal, right? Not a lot of work, just the basics to make it move in ready. Remember, like I said before, 90% of people, this is statistics from the National Association of Realtors, 90% of people want to buy a home and move into it with their family that they don't have to do any work to. So go in as the investor, find, or if you're lending on the deal, evaluate this stuff when you're looking at it and say to yourself, how quickly can this deal be done? If the market starts to change, is this still a home that's affordable for the average person to buy? Because people with a home with families, they need a place to live. They don't want to rent. They want a home that they can call their home, while their kids grow up and things like that. So, is it that type of home, right? So to me, those are the ones that are going to hold their value and hold their value longer, even if we do see a big downturn. But just a correction or a slowdown, these are the types of homes, location, the quicker ones, the cookie cutter type stuff, that's always going to be a pretty solid investment. Okay. And then we can look at multifamily. So let's think about multifamily for a minute. What we mean by multifamily is typically like an apartment complex. So 150 unit apartment complex, right? So if we do see a downturn in the market, or we do see an economic hardship coming, if these things do start to happen, and people do start to lose their homes and we start to get some foreclosures like we saw back in 2008, 2009, 2010 with the influx of foreclosures, or if we start to see more supply on the market, right, to where it's driving, and right now also, what are we experiencing in a lot of the country? Home prices are so high, people can't afford to live there, right? Even rents in some areas are so high. So these are all scenarios and cases for what's going on right now and what's coming in the future of why multifamily apartment complexes make a lot of sense to invest in. And this goes right along with mobile home parks or even RV parks, because people still need a place to live. And if the single family home is unaffordable, or if they just had a foreclosure and they can't qualify for another home to buy, they got to live somewhere. So multifamily and mobile home parks become a great solution. Okay. So to me, that is an interesting or smart play right now to be investing money into. Okay. So we have, in the private money club, because we're starting to talk about this, the private money club, where we match active investors, passive investors, and provide all these opportunities for things that I'm talking about here in the private money club. we work with investors that do apartment complexes and multifamily deals all the time. We work with investors that do mobile home parks all the time. And you'll have the ability to be able to invest in those projects, learn who the investor is, learn what the deal is all about. Does it make sense to you? Does this stuff make sense to you, what we're talking about? I mean, if you can put your money in most cases, it's going to be secured by that property, okay? By an asset that's worth a lot more. So if something did go wrong, you have the money coming in, and it's protected by the real estate. So there's a lot of things that go into it, but in my eyes, those are pretty good areas. I'm going a little long here, so I'm going to keep going. Land, I still think is a good investment. They're not building more land, especially anything that's in like a unique area. So like in South Florida, for example, anything on the water, it's very, very hard to find. So prices are going way up, anything along the water. In some resort communities and things like that, you're going to see land that's it's going away. Like there's nothing else to build. So land, I think, is a good place. It's a good place to maybe buy a piece of land in your self-directed IRA and let it sit for 10, 15, 20 years and let it just continue to rise. Or if you buy land, look at putting something on it, like something cheap, like a storage units, right? It doesn't cost much to put in storage units in, as opposed to building like a big multifamily complex or something, right? So those are exit strategies, which we can talk about. But so these are areas that I like, some areas I'd stay away from, probably commercial. With all the digital world we're in now, with all the Zoom meetings, with people working from home, commercial to me seems like it's a little risky. And I don't know what's going to happen, what the future of it is. So maybe you disagree, maybe you don't. I'm just telling you what I think right now. And then, so the other stuff that we wrote down, Airbnb, vacation rentals, just your long-term rentals, crowdfunding, senior living, storage units, notes, paper notes. These are all exit strategies, okay? So exit strategies are once you own the property or once the investor owns the property, what's the plan for that property? What are they going to do with it? Are they going to resell it very quickly and just, do a flip, take the cash you out and move on? Are they going to turn it into a vacation rental? Are they going to turn it into a long-term rental? Are they going to take the paper and sell it, seller financing? Are they going to remortgage it? And then you can go in and buy that note. Like there's so many different exit strategies and ways to take advantage of real estate and everything that we're talking about, that we're not going to have time to get into that right now today, but just know there's lots and lots of different strategies depending on what the market is doing. I mean, if there's nowhere to get good money, but you can buy a note that's backed by a piece of real estate that's been around for 10 years and has 10 years left on it. I mean, a lot of times that's a real safe, easy place to put your money and let it grow guaranteed 5, 6, 7, 8%, right? So these are all different strategies that you want to look into. All right. Now that we are looking at some of the different types of asset classes, what I wanted to do, and I know we're running into time, so let me show you guys how you can kind of start taking advantage of all this stuff and how you can start implementing it right away and what your next steps are after this training, okay? And if you have any questions on any of this, put it in the chat box or in the Q&A now so we can get to that also. But but I do want to go ahead and respect everybody's time and show what you guys can start doing right now. And if you have to log off, you can learn about a lot of this on the Private Money Club. So Sean, if you could post a link for the Private Money Club. Oh, and we do have an Ask Me Anything today at 4:32. So in 2 hours from now, you guys can log back onto the Ask Me Anything, register in the link Sean just put over there. That's it. And hop back on and we'll answer your questions live as well. But let me start to bring this together for you guys. All right. So, okay. So when you're starting to look at taking back control of your money and you start exploring all these new types of investments, whether it's a private fund, whether it's lending directly to an active investor that's doing a flip or doing a rental, whether it's getting involved in a new construction deal, whether it's buying rental properties and having the help of a turnkey rental company help you along the way with obtaining those properties and getting a management person in place, whether it's actually buying mobile home parks for $500,000, $600,000, $1 million, or investing $25,000 into the private fund that then takes your money along with everybody else's and buys the mobile home parks for you, whether it's buying notes, which are mortgages. no matter which strategy you're going to start following in the Private Money Club. And by the way, all of that is in the Private Money Club. All of those opportunities are available to every single one of you. And I can help you guys get started on every single one of those. Those are all going to require getting your money to work, right? So where is your money coming from? Now, if you're an active investor and you're looking for money, the Private Money Club is the place to start presenting your deals. You're going to complete what's called the perfect loan proposal. You're going to network in the Private Money Club. Let me highlight you on one of the Money Club Monday webinars that I do every Monday at 1 p.m. And let's get your face out in front of people, right? So then you can meet lenders that way. But if you're a passive investor and you need your money working for you, like I talked about before, where is your money and where are you putting it? So if you have money in cash, meaning at a bank in a savings account, in a checking account, maybe you're cashing out of somewhere. It can even be a HELOC, right? Or some other kind of line of credit. So a HELOC or a line of credit, it's basically just cash that's at the bank that's available for you to use for investing. So this all falls under cash. Again, a HELOC is just a home equity line of credit. So if you have equity in your home right now, that's lazy money. You need to tap into it, get that money working for you. If it's an IRA, so if it's in a qualified funds in a retirement account, get it into that self-directed account. Now you have money that you can do something with. Or if it's in an IBC money multiplier policy, you don't have any debts, you don't have any cars to buy, you want to grow wealth, okay? So a couple things you can do. Take some of this money, take some of this money. First, stick it into there. Get the guaranteed growth. And then put it into a private loan in a house, okay? Or you can just do it direct. You know, this is good. This is better. Over to here is best, right? Good, better, best. So depending on your strategy, how much money you have in there, things like that. So we can talk more about that again. Anybody that wants, happy to do a one-on-one consultation with you. We'll set up a 30-minute call, talk about what you have going on. If you just want to make sure you're doing things right and just want somebody to bounce ideas off of, just schedule a call with me. I'm happy to talk with you, okay? And that's what the Private Money Club is all about, is giving you the support, giving you the confidence, giving you the education, eliminate the fear so you can go out there, take control, and start making this stuff happen for you and your family. So these are different strategies. So this is where the money comes from, right? So once you figure out, okay, this is how much money I have. Maybe I have $30,000 here. Maybe I have $100,000 here. And maybe I have $50,000 here, right? So you got $180,000. So what do you do with that? Well, that's where you hop in the Private Money Club and you start exploring all of the different opportunities that I just said. Which one makes sense to you? Do you want to tie your money up? It's the first question you want to ask yourself. Short-term or long-term? Okay. So what do I mean by that? If you make an investment, do you want your money to be tied up for 3 to 6 months? Or do you want your money to be tied up for 3 years? Use those as an example right now, okay? There's everything in between, some even longer, but I'm gonna use 3 to 6 months or 3 years as my example, okay? So why would you want different lengths for your investment? Because what happens with a private loan, and I'm not gonna get into this right now, unfortunately, I was going to, but whenever you make private loans, whenever you invest in a private fund, you invest directly to a flipper, your money's going to be protected in most cases by that asset, by that home, by that piece of real estate, either in a first lien position or sometimes a second lien position. Okay. So your money's protected just like the bank's money would be protected if they were to do a mortgage. And we do that through promissory notes and mortgages. Now we give you the promissory notes and mortgages, the templates to use in the Private Money Club. So you can use those. We teach you how to have an attorney look over it if you want to, or if you're working with, so your money's 100% protected at all times. Just understand that. I don't have time to get into the details, but just understand that's what's going to happen. Okay. So your money's protected. And what happens in a private loan or a private investment is typically, let's say you have $180,000. What you're going to do is you're going to invest $180,000. That investment is going to pay you typically interest on a monthly basis. So if it's $100,000 you're investing and it's 12% interest, you're going to get $1,000 a month until that $100,000 is paid back to you. So you give somebody $100,000, they pay you $1,000 a month. And then as soon as they're done with your money, per the terms of the agreement, per the terms of the promissory note, they're going to give you that $100,000 back. And what you made was that $1,000 a month, plus sometimes points and whatever else that is involved, right? So what makes sense for you and your money right now? So let's say it's cash. Let's say it's coming out of a HELOC or coming out of a bank account. Well, maybe you want to do short-term loans, 3 to 6 months, because you think that the real estate market is high and you think the real estate market's going to drop. And if the real estate market drops, what are you going to want to do? You're not going to want to just do 12% loans. You're going to want to buy homes, actual houses that are going to appreciate, and you're going to make 50, 60, 80, 100, 200% returns, right? Because if you buy low, when the market's down, what always happens with markets? They go back up. The key is buy low, sell high. So if we're buying low, but if we want to buy low, but our money's tied up in a long-term contract, we're not going to have the money available when things like this start to hit. So out of these 3 areas, what might be a good place, which might be a good source of funds to use for a long-term investment, 3 years, 3+ years? The IRA, right? The retirement account. Because a retirement account, you can't touch that money, that profit anyways, until you're in retirement age, 59 and a half, right? So if you're 40 years old, you're 50 years old, you're like, well, why do I want to keep doing all these passive loans every 3 to 6 months when I can just stick my money here for 3 years, forget about it. I know it's growing every single month within my IRA. And then in 3 to 5 years, when I get the money back, I'll worry about it then, right? So that makes a lot of sense in that scenario. So think about, where is the money coming from and what are you using it for? Okay. Maybe all you're trying to do is create consistent, predictable income for the rest of your life. You don't need the growth phase anymore. You need the living phase, right? You don't care about growing wealth anymore. You just want money to live on, to be able to enjoy your life on. So you want that income. And maybe you have $1 million in an account, right? Whether it's here or wherever, maybe you have $1 million, but you don't want it to be in a retirement account. You want that money right now to live on, right? So $1 million at 12% is now paying you $120,000 a year. So now you have $10,000 a month coming in every single month, consistent, predictable, and you know exactly what's going on. And if you can do that with a long-term investment, 3 to 5 years, then why would you not do that? Right? So everybody's situations are different. So first think about where your money is, and then think about, what am I using this money for? And what are my goals with this money? All right. And that'll help us start to identify, what do we want to do with this money? Like, is it short-term or long-term? Okay. So somebody that thinks the market's going to come down, you want to do short-term, right? Because you don't want your money sitting in this cash account, because what's it doing? We talked about at the beginning. It's losing money. 5.4% after all this stuff is taken out, inflation. You're losing money just sitting there. Even right here in a policy. Yeah, you're beating inflation inside the policy, doing nothing. It's scary, but why not take that and still keep it growing for you, right? Grow wealth while you can. So then one day you can live off of that wealth. So that's what this is all about, guys. So depending on the situation is the strategy they're going to follow. I know I need to wrap things up here. So I just wanted to answer a couple of these questions. And then like Shauna said, if you guys hop on that Ask Me Anything later, we can go ahead and do that. And if you want to talk specifically about your situation and what you have going on, get in the Private Money Club, schedule a call, or send me an email. I'm right there to help you guys get started. So I hope you guys enjoyed this. I want to answer these last 3 questions. Is there a minimum amount to put in a self-directed IRA? No, there's not, Anita. You got to start somewhere. You know, in many cases, if you're starting a brand new one, you know, you're limited to how much you can put in annually. So, but there's no minimums. It just matters what you're going to do with it. So what is the subprime lending version of 2021 that will make this market crash? It's not subprime lending as much, Duck. If you're still on, it's more just the overall economy and the overall, and really, in my opinion, what's driven prices up so much are the artificially low interest rates. I mean, people are financing homes at sub 3% on 30-year mortgages, which is unheard of. And what happens is if you can buy a home at 2.9% and it costs you $2,000 a month, maybe that's a $300,000 home. But if you're paying 6%, which is probably more reasonable where interest rates should be, that same $2,000 a month now buys you a $100,000 home, not a $300,000 home. And people are typically, again, 90% of people want to move into something ready, and they want to pretty much max out their monthly payment that they can afford, right? They want to get as much home as possible. That's what people do these days. Buy as much home as possible that you can afford monthly. Who cares about the cost? And that's a lot of mindset and what's going on right now. So to me, those things are driving it up. And just the fact that everybody has money right now, right? The stock market is crazy high. People's 401ks have never been better. Like everybody thinks they have money because of the equity in everybody's houses. They're opening HELOCs. They're tapping into the equity. They're refinancing homes. They're getting the cash out of those properties. And in most cases, they're blowing it. I'm not telling you to get a HELOC and go blow it. I'm telling you to get a HELOC and put that money to work. Grow your wealth while you can. Take your IRA money, grow your wealth while you can. Take your money, stick it in a guaranteed vehicle, learn infinite banking, and take advantage of all of this stuff. And that is how you're going to create success and wealth for yourself in the future. Where would you draw a line percentage-wise between a major renovation and a scrape and build over? It's not a percentage, Cindy. It's more just it depends on the deal. You just got to evaluate it. What work needs to be done? What's the overall price of the home? And Claire said, thank you. So, all right, guys. Well, thank you so much. I'm going to hop off here. Shauna, thanks for staying on the entire time with me. I hope everybody got something out of this.
All right. If you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel and don't ever forget to smash that alert button. We'll see you on the next one.